Alright, today we're going to be running through everything that I use to take leverage trades, including the software, indicators, levels, money flow, the entry, stop loss, take profit. All of this we're going to be running through in this video quickly, right? This is not going to be in depth at all. It's just going to be quickly running through all of the confluences I will use. If you want to learn how to actually use those confluences and what those confluences mean, go ahead, check out my trading series. There's some stuff covered there, as well as mainly just go ahead and research it yourself, search it up online, go watch YouTube videos on how to actually trade this stuff. This is just an overview of what I think is the best trading strategy when it comes to trading Bitcoin. I should also preface, even though I said I'm going to cover everything, there's still going to be a ton of information I'm going to leave out of this video. But, I'll get to that sort of stuff in my trading series later on, so make sure to subscribe to the channel so you don't miss future content where I do cover more advanced trading strategies and that sort of thing. But without further ado, let's go ahead and jump into this. So first things first, what you're going to want to do, download TradingView, because that is your best trading software for just like a general overview of the charts. Always good to be using TradingView to identify levels and that sort of thing. But let's get into what you need to do. So first things first, you can see we're on the Bitstamp exchange right here. No one really trades on Bitstamp. What you're going to want to do, go up here to the search, do bitcoin.p, bitcoin.usdt.p, right, the perpetual contract for whatever exchange you're using. For this example, we're just going to pick Bybit. So you want to pick the Bybit exchange, right, if you're trading on Bybit. Make sure it's the perpetuals contract, right? Because that is what you're going to be trading on, right? You don't want to be looking at a spot exchange when you're trading perpetuals, because price will fluctuate depending on each exchange differently. Now, what I have up here, right? I have two templates. I have an edge identifier and a level identifier. You're going to want to make two templates. You don't have to copy me exactly, but just for an example, this is my level identifier. You can see this is a periodic volume profile that I have set to a weekly. You can see period is set to a week, and this will show me the volume profile of each week. I would then have a session volume profile. This is set to daily, right? So I have the daily session volume profile, the weekly session volume profile, and if we actually jump into here to a day, you can actually see the blue is the daily profile, and the yellow is the weekly profile. Next indicator I got down here, this is Traders Reality Main, and this is going to give you vector candles on the chart, as well as a bunch of other stuff, like a 50 EMA. I do love the 50 moving average. So go ahead, slap this onto your chart, and then go through all of this stuff in the settings. There is a lot to change in here and mess around with. So definitely go ahead, get this, and figure out what you want to use for yourself. So make sure you got that. And then nextly, fair value gaps, right? There's a simple fair value gap indicator by Spaceman. I think he has the best one on TradingView. So you can go ahead and get this. And then lastly, what I have here is Smart Money Concepts by Lux Algo, and this will show us our order blocks. So these are all of the confluences that I use to find levels, right? So it essentially is imbalances and volume levels, right? So how we will find our levels is simply this. So jumping in here, you can see it is a lot of information to take in, and obviously you don't want to just be taking positions at every single one of these limits, right? Everywhere you see a line, everywhere you see a box is not where you want to enter. You want to confluence it with a swing failure pattern. So what do I mean by swing failure pattern? Well, you have what are called poor highs, weak highs, bad lows, and these are represented by a lot of wicks around the same level. So essentially, if we're going to look at this without all of our indicators, right, because this is a lot to look at, we'll just go ahead. I'm going to just take off all these indicators real quick, and we're going to identify sweep levels. So what I'm going to do is I'm going to go ahead, go into bar replay mode, and just take us back to, let's just say right there, right? And let's identify where these sweep levels are, right? So just looking at this, I can already pinpoint where those sweep levels are, and I can already tell other confluences that will go along with those sweep levels just by looking at this chart. So what do I mean by that? Well, essentially you have these highs right up here, right? See these two highs, how they're close together, they're at the same level, and then above it you have fast moving price, right? This is an imbalance in the chart, and then this is a sweep level, right? Liquidity behind these wicks. Essentially when price, wicks off a level, people put their stop loss at that price, which will then create a liquidity level. So we'll go ahead, we'll mark that out. That's our first sweep level. All right, we can see a similar thing happening to the downside here. You see all of these wicks around the same level. Nothing really sweeps through to grab that liquidity. That is going to be another sweep level to the downside there. So we'll mark that out. To the upside, one more time, we can see, these highs are around the same level. This is another sweep level right there. Then we have coming down here, you can see this high right here did not clear into these imbalances, right? The vectors coming down, this was fast moving price. So we'll go ahead, we'll put another sweep level there, as well as this high right here. You can see it doesn't make a higher high than than this liquidity level that we just made on the chart. So we can mark this out. And then coming to the downside here, you can see same sort of deal, right? You could mark this out as well. Although I will say there's no point to really mark these two levels out because we already have bigger zones above, right? So if I were to, plan for a trade, I would basically just take these out and I would wait for either this level or this level to get swept. I might even want to just take this out as well and wait for some of these bigger levels, right? Wait for all of this stuff to get swept before actually entering my position. So that's something you definitely want to take note of. So that'll give you a higher win rate if you do go ahead and wait for better confluences. But we'll go ahead. Let's play this back. So we're on 3x speed. Let's go ahead, see what happens here. So as we can see, when we got below this level here, it did not close above, right? For a sweep to be valid, it needs to close back above the sweep level on minimum 4-hour time frame. Really, you're looking at 5, 15, 30 minute or 1 hour closes above the sweep level, and then you're good to enter the trade. If it does happen close above within like a 4-hour or even daily period, that is also valid, but a little bit more rare and a little bit more difficult to trade. You have a wider stop the larger the time frame. So in general, 15 to 1 hour time frame is where you want to target for the sweeps closing above. As we can see here, we're on the 1 hour time frame. It really rejected the level. You can see here it went up to try to get above, but could not accept and went down lower. So this would be an invalid sweep level. As we discussed earlier, right, that wasn't a really good one to begin with because this is our bigger level at the bottom. So, at this point, we're not entering any trades because we didn't have a confirmation of a sweep, and we have this bigger level we're waiting for. So we'll go ahead, continue to play this, see what happens with price. You can see that was valid. So if we were to jump in here to like a 15-minute time frame, you can see, got back above and closed a 15-minute candle within this range, right? So you would see the close on this candle right here, and you would go, okay, I want to enter this trade. Obviously, you're not just trading off of sweep levels, but this is just conceptually like what you do to enter a swing failure pattern, which is the only setup I really trade. You'll go ahead, you'll pull your fibs high to low here very locally, right from the low to that first close at the 15-minute. And then you'll want to enter in on one of these fib levels, right? If you're really aggressive, you can do like 382.5. If you want to be safer, you do like golden pocket to 786. So if I did what I normally do and I wasn't able to catch the failed auction, which is the best thing you can do, is right, catch it on the failed auction. We'll get into that later. Then I wouldn't have actually been able to get into this trade. So that's fine, right? I missed this trade. No big deal. You don't want to chase, right? As soon as price leaves the fib without you getting filled, you just wait, just be patient. You don't have to chase. You can see price does come back down to the sweep level. What you could have done is just kept pulling your fibs, right? So if you would have gone golden pocket to 786 right here, you're filled right now if you were to have taken this. But you obviously want to be looking at order flow to take this. You don't want to take that blind. So let's see what happens here. You can see price does rise above golden pocket, but then sweeps through and nukes below. And this is why I always say put your stop at entry, right? If you did enter in this golden pocket, you would have had time to put your stop at entry before price nuked through. But even if you weren't able to close out at entry, no big deal. You have your stop right there, right? You put your stop at the bottom of the wick whenever you enter this structure, and that is your invalidation. So you have a tight stop loss, right? If you were to take like your entry to the stop, it's about 1%, so not terrible. Your take profit would be like 10% higher on Bitcoin. So you could take this trade 10 times, and if you lose, 4 or 5 of them, it's not the end of the world because your risk to reward is like a 10x. So no issue. We lost this trade, but it could have been valid just based off a sweep structure. Now, was it valid based off of levels? And let's go ahead, let's pull that up, right? So let's get all these levels out here. Let's see if we can figure out if there was something we missed as to why we shouldn't have been taking that trade. And as we can see here, no, it was a weekly value area low. As you can see here, it was a daily value area low. You did have some levels there. If we look back here further on the chart, though, we didn't really have the imbalances you would have wanted. So you can see here, these wicks did not get swept. So, our imbalances were below this level here. So coming back to the current price, you can see, we weren't able to reach any of the imbalances that would have been below this level. So you didn't have any confluences on like a fair value gap, vectors that you were using as confluence there, which you don't need necessarily. Volume levels come first. So you did have some volume levels. This could have been a valid trade just based off of this, but you would have also wanted to have been looking at order flow, and I think that's a big reason you could have known this was going to roll over. and we'll get into that more in the next video. But just real quickly, because I do think I'm going to break this up into 2 parts, we'll give you some of this order flow stuff right now, just so you guys can understand what I'm talking about here. So coming in here, this is where we were on the charts, right? You had the sweep down, you can see a wall on Binance. This is like an actual order coming into the order books. Someone bought the bottom there. Price then rallied off, and you can see there was a big imbalance, like 53 to 0 longs coming into the market here. This is a failed auction, so you could have traded the failed auction with this wall coming in here, and that's how you could have entered way down here at the lows, and then had your stop at entry almost immediately. And that's how I actually prefer to trade, rather than just taking the golden pocket. But if you're not watching the charts that closely, you can miss these if you blink your eye. So a lot of times you will miss the failed auction, and then you can just go ahead and enter the golden pocket. It's not the worst thing to do to enter that golden pocket. So you would have entered here, right? This is what we're talking about, and then it rolled over, would have stopped you out. How could we have known that this was going to roll over? Well, let's look at our open interest versus CVD. The open interest is the amount of positions being open. CVD is the direction they're being opened. You can see, first of all, when we came down to sweep this, we did not close out a lot of positions, right? There were still a lot of positions open. It was actually reset more of at this wick that came up here. You can see all these shorts were getting liquidated when we came up to this level here. You can see our short liquidations is brighter than the long liquidation. So this wasn't much of a liquidity grab, right? And that's something that could have warned you, like, hey, maybe this isn't the best trade to take. And then if we look at Bybit over here on the right, Bybit are usually on the right side of the market. So we want to see what, Bybit's doing. And as you can see, after we bounce off this golden pocket, right up here at the highs, you see positions start being opened. And these are short positions. They start shorting up here, and price is following. So if Bybit is shorting and price is also going down, that is bearish. You want to get out of the market. So if you saw this in the order flow, you would have known, hey, let's just put my stop at entry, because your entry would have been down here, and you would have just broken even on that trade. That's how you always want to trade, right? You always want to be able to, even if you're wrong, just get out at break even. And that's how you become profitable over time. It's all about risk management and not losing money, not necessarily about making a bunch of money. So that's a big mindset thing you got to think of when trading, is always protecting your capital and always getting out of your trades as soon as you see something going against you. But we'll get into this more in the next episode of this, right? So subscribe for the next episode. We're not done yet, though. Let's go back to this over here on TradingView. Let's see what happens when we come down here. So this is a big deviation that is being formed on the chart. Again, you would have taken this based off of order flow, so we're not going to talk about this right now. So we're just going to wait here, ignore all this. Maybe we'll get into that in the next video on how you could have read the order flow to actually get to a long from the lows. But let's see here. We can see price came up. Would this have been a valid short? Absolutely not, right? We did not sweep these levels. There's no volume levels or anything like that on our chart right now. So we're still just kind of waiting. So once again, getting close to this level, but not quite grabbing it. So you know that the liquidity is building up there, right? There's a lot of stops now at these levels. You're just patiently waiting. Boom, there you go. So now we can see that we have fully deviated through, stopped out all of these positions from these weak highs, as well as previous sweep levels. Everything got taken out. Then you can see, within an hour or so, we did get a close below, right? If we do zoom up to like an hourly time frame, you can see we were wicking through this level. We weren't able to close an hourly above, and that could have been your sign to put your short entry at the sweep level, right? Because that's completely valid. You can either put it at the sweep level or at golden pockets. With how tight this sweep was to the wick, right? That was like 0.4%. Just put your entry at the sweep level, and then you'll have a bigger chance of getting filled. You could also just put it at like the 382 or the 0.5, because that wick was so close. You have a pretty tight stop on that, so that would have been a really good trade to take there. I mean, that's completely valid. We swept the level, went up into a fair value gap. It doesn't show that the gap was here because we already wicked through, but this is where the fair value gap was, this sweep, right? So right above that sweep level, you had a fair value gap. So you went ahead, filled that, exited the fair value gap. That would have been a sign to take it. So you have imbalances on the chart. You don't really have too many volume levels, but that's okay because it's an imbalance, right? Imbalances a lot of times will not have volume level confluences, because that's like the definition of an imbalance. It's somewhere where it sweeps through very quickly, creating a volume gap. And these gaps can act as resistance a lot of the times if you do get that structural edge like a sweep level, right? These gaps, a lot of the times, will go ahead and just, rip up to the upside because there's not volume there, and it'll rip right through it. But as soon as you have a failed auction within a gap and you close below the liquidity level, right, the sweep level, that confirms bearishness, and that is your signal to short. So that's how you can enter trades based off of sweep levels, volume levels. Now we're going to get into the edge identifier. This is the other chart I have. This is RSI, Market Cipher, another daily volume profile. Again, the trader's reality, vector levels and all that, as well as I have this like Lux Algo money flow. This is something I've been playing around with. You could take this off. This is not really necessary, but essentially you can see these are the sweep levels I had marked out on my chart. And then if we jump in here to RSI, we can see we do have more of an exaggerated kind of like a bearish divergence here on the 1 hour time frame. You can see lower highs on RSI, higher highs on price. That is a bearish divergence. That is an edge that you can have to short this level in addition to all of your other stuff. If we went out here to like a 4 hour time frame, you can see, same sort of thing. Higher highs on price, lower highs on RSI. You do have that bearish divergence within this range, and that's another edge that I really require to enter trades, right? I always want a RSI divergence. I want some sort of level imbalance, whatever. Have to have that sweep in there, and then I will look at order flow, and that is what I'll say for the next video. Oh, and then real quickly, I said I was going to cover take profits. Your take profit levels are going to be essentially the exact same as where you would have entered a trade, but on the opposite side, right? So if you're in a short, you take profit at where you would enter a long. So like if I'm in a long from the lows here, well, my first take profit level is going to be up here at this sweep level with all these volume levels up in here. So that's TP1. TP2 is going to be a sweep of these highs up at like 74K, right? So this is where you take your profit, right? Is at these liquidity levels, at volume levels, at imbalance levels, and you just use those confluences together to set your take profit levels. In addition to that, I will leave some running on my position, right? Just in case it is, if I'm in a long right now and this thing just runs to $100,000, I will be able to just like have some running on the position, and I'll save that to close it when I see order flow going against me. So that's kind of how I will take profit on my trades, but taking profit is not nearly as important as that entry and stop loss. You always need your stop at the wick, and you always need your entry close to that wick, and never chase your trades. Those are the two most important things. It will give you that luxury to where you can lose a couple trades, be profitable on one, and make up the losses from those others. As long as you're managing your risk and you don't have big losers, you can become the 5% that are actually profitable in the markets. So yeah, with that being said, I'm going to go ahead and end the video here. If you have any questions, I got my Discord link below, as well as the software I'm using in this video. If you want some discounts on like a monthly subscription for Trading Light or TradingView, go ahead, use my link. It does help out the channel. But with that being said, thank you all so much for watching, and I'll see you all in the next video.